I'm going to tell you about the worst investing decision I made using an AI tool. It cost me £2,000 and it taught me more about how to use these tools correctly than any success I've had. I'm sharing this because I see other investors making the same mistake constantly, and I want to save you from it. The mistake sounds embarrassingly simple in hindsight. I over-trusted a backtest. I saw a strategy with beautiful historical returns, deployed capital based on that history, and discovered in the most expensive way possible that past performance really does not guarantee future results. Here's exactly what happened, and, more importantly, here's the framework I built afterward to make sure it never happens again. About a year ago I found a composer strategy built around a specific technical signal. I won't name it because this video isn't about the signal, it's about the mistake. The backtest showed a 31% annualized return over 10 years with a maximum drawdown of only 12%. That combination of high return and low drawdown was extraordinary, better than the Sharpe ratio of most professional hedge funds. I should have been skeptical immediately. Extraordinary backtest results are almost always the result of one of three problems: overfitting, look-ahead bias, or survivorship bias. Overfitting means the strategy was fine-tuned to fit historical data so precisely that it essentially memorized the past rather than identifying a durable pattern. Look-ahead bias means the backtest inadvertently used data that wasn't actually available at the decision point. Survivorship bias means the backtest only includes stocks that still exist today, excluding the ones that failed. I identified none of these problems at the time. I deployed £5,000 into this strategy. In the first 3 weeks it performed roughly in line with the backtest. Then market conditions shifted in a way the strategy hadn't been designed to handle, a period of choppy, range-bound volatility that triggered frequent signals without follow-through. The strategy generated 8 trades in 4 weeks, each incurring transaction costs. The signal that looked clean in backtest produced false positives in live market conditions. 6 weeks in, the strategy had lost 18% of its value, well outside the maximum drawdown the backtest had projected. I exited at a £2,000 loss rather than averaging down into a strategy I no longer had conviction in. The exit turned out to be the right call. The strategy continued to underperform after I exited. Rule 1. Be deeply skeptical of backtest Sharpe ratios above 1.5. Genuinely durable strategies with robust edges rarely show Sharpe ratios above 1.5 in backtest. Anything significantly higher is almost certainly the result of overfitting. Rule 2. Always run a walk-forward test before deploying real capital. A walk-forward test means taking a strategy optimized on data from period A, and testing it unmodified on data from period B. If the strategy's performance degrades significantly in the out-of-sample period, it was overfit to the training data. This test takes 10 minutes in Composer and would have caught my mistake immediately. Rule 3. Paper trade for at least 4 weeks before going live. Paper trading means running the strategy in simulation mode, real signals, fake money. 4 weeks is long enough to observe how the strategy behaves across a range of market conditions. If the paper trading results diverge significantly from the backtest, stop. Rule 4. Size new strategies at a maximum of 10% of your portfolio. No matter how good the backtest looks, you can always scale up after 3 to 6 months of live performance confirms the strategy is working as expected. You can never recover capital lost in a strategy you sized too aggressively before it was validated. I hope this saves at least one person from making the same expensive mistake I made. The 4 rules I've outlined today are now non-negotiable parts of my process. and they cost me £2,000 to learn. Subscribe so you get the benefit of my future mistakes without having to make them yourself. Drop a comment below if you've had a similar experience. Let's share what we've learned.